Most investors lose money in junior mining stocks, not because the sector is broken, but because they don't know how to decode them. Headlines, hype, a few flashy drill holes suck people in, and 80% of those companies will never make it. I'm Andrew O'Donnell, founder of The Market Mindset. And after years in finance and watching billions flow in and out of this sector, I built the drill sheet. 10 factors, 10 minutes, one score that filters out all the noise and shows you which stories deserve your money. First, rocks matter. Without continuity, without scale, without real 3D models, you've got nothing. The drill sheet asks, is this deposit a system or is it just a one-hit wonder? Without that foundation, the stock dies. Second, bet on people, not just rocks. Has management raised money before? Have they built a mine? Have they sold a project? The drill sheet scores the team the same way Wall Street scores CEOs, by track record, not by promises. Third, catalysts move stocks, not just rocks. Geology is the foundation, but stocks reprice on events investors can trade. Drill results that prove scale, JV deals, financing, resource updates. Without catalysts on the horizon, even great geology won't move the share price. The drill sheet maps those catalysts on a timeline, so you know if you're looking at the next re-rate or just watching cash burn. Fourth, know your multiples. If you're paying $100 million market cap for a story your peers are paying $20 million for, you're the bag holder. The drill sheet benchmarks juniors against peers to know if you're buying leverage or paying for hype. Now, let me be clear. The drill sheet is not a magic number. It's not a crystal ball. It won't predict the future or tell you when to buy or when to sell. What it does is far more practical. It filters out 80% of those juniors that are just noise, and it shines a spotlight on the small minority with legitimate prospects. It's the fastest way to reveal true potential and to know the right questions to ask next. That's why we tie it to CEO interviews. We've done hundreds of CEO interviews. The score points that spotlight, and the interviews let us drill deeper. This is book one of the Drill Sheet series, Unlocking Junior Mining Opportunities. 10 factors, 10 minutes, one score that filters noise and shows you the minority of juniors with a real shot. Here's how to try it. Download book one free right now. Every Friday, we go live with subscribers and we break down the 2 companies that we scored that week. If you subscribe now for just $9, we'll run a drill sheet on your pick, the company you want to see. Send us the ticker and you'll see the framework at work. Stop guessing. Start investing like the pros. Download Unlocking Junior Mining Opportunities today and join us on Friday. Hello, everyone. Welcome to The Market Mindset. Today, we are diving into the defining contradiction of modern markets, and we're looking at it through the lens of the narrative of critical metals and rare earths and whatnot, and in the essence of how markets are actually working. And I'm tying it into, because I saw an article about Andrew Forrest from the founder of Fortescue, his comments regarding critical metals on mining.com. Obviously, wonderful site. You should go there to get some good stories about what's happening in the mining market. We get the headlines from there and dig deeper into it. But it made me start to think, like, what's the motivation there between his comments, which I'll get into. We're going to tie all this together, believe me. And then I start considering, market efficiency, how markets are trading. Why is it that all of these mining companies and exploration companies have dropped significantly because of AI? There's no correlation here. There's no fundamental reasoning why that should be happening, and that they're not acting rationally. So of course, then my brain goes back to as far as first year university, thinking about rational markets and that type of idea that they price in all the events, and then considering, especially with machine learning algorithms, there's nothing efficient, market rationality in markets. I would say that they're exactly the opposite. So I've been working on a couple ideas. So this is going to be an interesting rant where we're going to cover a whole bunch of things. And I don't plan to get to the bottom of it, but we're going to throw some ideas out there because it's a thesis that we're going to continue to keep on talking about and demystify some of the nonsense out there, because Just as much as I like some of the critical metals theme narrative because it's drawing attention to the sector, there's lots of forces at work here, and sometimes they hurt. And we're seeing right now, because of flow, not because of fundamentals, not because someone put out bad essays, that the flow of money means that algos chasing headlines means that even though Palantir had great revenue growth, the stock dumps, and all of a sudden XYZ Junior Explorer dumps 20%. There's no reasoning behind that. Anyway, that's the thesis we're working on here. That's the overall rant that we're going to talk about. And the reason why this is important, that, Andrew, why are you even talking about overall markets? Because they're all interconnected. Right now, 80 to 85% of all daily trades are machine driven. They're algorithms. It's ETFs. The quants are chasing volatility. They're not looking for value. That's not what this market is right now. That means that basically a handful of coded rules, search for this, can move trillions of dollars. And there's no reasoning behind it. Once again, using machine learning or AI, whatever you want to call it, it's giving you an answer, and it's amazing. It's a tool to give you an answer given the parameters and the plan or the blueprint you've given it. It isn't thinking or creating for you. It's not doing that. It's a pattern recognition tool. Wonderful that it is, but we need to demystify all this idea that that AGI is coming soon, and it's thinking and it's conscious and it's this nonsense. It's finding patterns. It's just incredible at it. So I'm not dissing the large language model. I love it. It helps me enormously, but it's a good example of narrative, optimism, and reality. And that matters because, as I mentioned before, Palantir, a company we talked about, at $17. I don't even know what it's trading at today, but it hit as high as 240 because it's actually using AI. It's one of the best case scenarios of AI in use as software, as plans, rather than the infrastructure and the chip play, which is real as well. And everyone sees those big headlines of infrastructure buildouts. But let's talk about mechanics here of just how the tail wags the dog now, and how this idea that we've kind of built ourselves into a corner of people investing in companies and finding companies they like with management teams. Basically, the way that I look at junior mining and looking at mining companies, of you have to find the right people with the right money, with the right project, common sense investing, like going back to basics. That's people don't really do that anymore, and they've been dissuaded to do so for lots of reasons that you could go into long thesis about. But most of your major banks and major brokerage, they do not want to sell you a stock. They want to sell you an ETF. They want to sell you a fund. They want to sell you a basket of projects and products because it's better risk management for them. It's better compliance. The markets are regulated immensely, and some would still say not enough. I would argue the equity markets are very well regulated. Other markets, maybe not so much. But let's just go over some of the mechanisms of how, even though the ETF market is the staggering majority, I think your top three, your BlackRock and State Street, they own about $20 trillion. So I never want to hear anyone complain about big money and big funds pushing narratives. That if you keep on putting your pension and all your money into an ETF that's run by BlackRock, you're going to get BlackRock ideas. In any event, still that 20%, which includes you and me, at a very minute level, those active managers, they can shift and push and move that around very well. So here's just an example. A fund shorts or buys, let's just say they buy an ETF. They then, those authorized participants hedge by buying and selling every stock inside that basket. And what they would use, whether it's a CTA, volatility controls, momentum algos, these are basically types of funds. So like a CTA or commodity trading advisor, those are trend following funds, usually like, that trade futures or currencies. They buy when markets rise and when they fall, amplifying the medium-term trend. A volatility control fund is an institutional strategy that automatically adjusts exposure based on market volatility. And then when volatility spikes, they sell risk assets. When it calms, they buy. So that actually reinforces the boom bust cycle, and it amplifies it. So in essence, it's not a volatility control, it's an amplification. And then there's momentum algos, which are also same type of idea. They're chasing after short-term trading, and it's that nano trading, which we can't compete against, where they're able to basically get a trade in before you've hit enter, they're already ahead of you. And these also, they chase after headlines, they chase after movements, they chase after technical analysis of what's the direction, what's the volume, and they work in between them, grabbing minute fractions. But we're talking big sums of money to push that. So when you have those three types of plays, a very intensely smart, we're talking like rocket science engineers creating algorithms along with financial professionals. It's a quant story that's being driven not by the actual fundamentals, one would argue. And we see a lot of this about the AI bubble, Palantir being a great example of, I think it hit high of like a 650 P ratio, which is 2008 era levels of PE. But you could see how, once again, $1 billion of fast money could easily cascade through hundreds of billions of market cap very quickly. And during stress, ETFs make up about 40 to 50% of all of that share volume because they have to rebalance. They're constantly having to rebalance to mimic exactly that ETF. So this is basically how the tail wags the dog. And these funds know it, and they do very well because of it. So, the reason why juniors suddenly plunge when there's nothing changed, well, that's part of the story. It's flow. It's just that you don't have the major BlackRock fund doing it. You've got someone who's very smart and ingenuitive that goes, hey, I wonder if I just had a $30 million fund or a $40 million fund and was able to do the same strategy on a smaller level, my percentage returns are going to be strong, and I can bully this market so much better. Like if you want to bully a tight liquidity market like the junior mining space or just mining in general, not hard to do so. And it is smaller in comparison, but that doesn't mean there's a ton of money that can't be made. It might be like piddlywinks to Goldman Sachs or JP Morgan or BlackRock, but believe me, making millions off of playing these flows is attractive to lots of people. Two, the last couple of days, you've seen this big sell-off, and someone tell me what the news is has changed the story of critical metals or of gold. Yeah, gold has pulled back, but has the economy all of a sudden everything's perfect? Everything's fine in the US. Everything's perfectly fine when we just got out a budget, which that'll be a whole different other show. But just put the budget into a large language model and ask it to tell it how effective it is. Will it attract investment capital? Has it provided any solution or blueprint as to how they're going to get out of this situation? And it's going to be brutally honest with you and tell you that no, there's nothing in here of any substance. And that's frightening because it isn't that Carney isn't smart and that he isn't capable. And I'm not being political on this. I would be just as virulent and upset if any other party put out a budget that was just, let's talk about setting up committees and move money around. We put out a great article the other day too, whenever there was this headline news about $26 billion applied to critical metals. No, there isn't. There's not. When you look past all of that, they put money into 5 projects, and that's great. Like, listen, I'm not going to diss it. That's great, but no, it's not 26 billion. So go read that article to see the actual truth behind the headlines and the news and all that. To see, have they actually placed 26 billion to projects? No, not even. We're not even in the same breath, and that's important to see because once again, it's the story, it's the headline, it's the narrative. And everyone's playing the game. I mean, hell, people in my job play that game with clickbait titles all day long. And I know you can make a clickbait title and get some views. But to me, that's just entertainment. You're not actually getting people who want to buy a stock or who are interested in looking at sectors that are undervalued, but yet actually critical or interesting. And it's not actually analysis. It's and this kind of show, this rant is basically to get people to go look at our drill sheet, which is analysis and which is going to be consistent. It's a model. It always remains the same. There's no passion one way or another that I really like a project more than another. It's going to tell me exactly how things are going as each news release comes out. And as assays or 3D modeling comes in, it can assess and tell me exactly what I need to know. That's what this channel is about. It's actually getting into telling the story and revealing some of the reality of the markets as well, because people, believe me, are calling me saying, why is my junior down 20% when they put out good assays a few days ago? And to tell them it's because that there's an AI sell-off, it sounds ridiculous. The brain goes, wait, that makes no sense. In a rational investment banking environment where you know that money has to go to infrastructure, where you know the amount of money that's required for energy, for any of these data storage, that's where all of the money should be flowing to right now. Even if you made a bundle in NVIDIA and you made a bundle in Palantir, you've made so much. If you stayed at 17 and it went up to 240, any person in the right mind should be saying, I should be taking, and this isn't investment advice, I'm just throwing this idea out there. I've made so much in this run, I should be looking to, minimize that portion I own and put that money into something else. Because how much more am I asking out of this one stock? Especially if it has a PE of 650. And once again, I think Palantir is a great company overall. It's a fantastic story. They're actually doing AI work. Very controversial. Don't get me wrong. It really is. But that's a whole other nuanced story altogether as well. But the recent, big rush up with a lot of juniors getting a lot of attention and doing well also kind of felt wrong because, we had some great discoveries, but we've had some before and no one paid attention. No one cared. We've had great discoveries and people sell off whenever times were tough. So, maybe start to think listen, there must be a lot of people out there that are feeling the same way. I mean, other than calling me or sending me an email, that are saying, this doesn't make any sense. Why is this stock going down? And we touched on it with Dr. Quinton Henning a bit. It's the fair weather friend. It's the person who hears something, maybe just watches my show and says, oh, interesting. Yeah, I hear a lot about gold right now. I should go take a look at Sitka or Goliath or whatever. And they pop in, maybe it goes up 10%, then it drops 20, and then they bail out because they're like, holy smokes, this is too much. And they haven't put the work in. They got excited. And maybe it went up really quickly and they think, oh, this is amazing. This person's onto something. And that's, the problem with markets in general is once an algo gets a headline news story and starts running with it, retail will see it. People that are interested in the market are going to see it. And, people that look for headlines to trade to be able to eke out a couple percentage points, they're on it. Even if it's a small market, it's just amplified in a small market. You can move it way stronger. In any event, right now, what we're seeing is, the way that junior miners trade it's basically like in puddles, not in oceans. If one single ETF redeems, has a single, has reasonable redemptions, that can make them crash 10 or 20% just right there. So once again, if someone went and bought a Sprott ETF on the junior, or the Van Eck or whatever, whichever one you picked, you went in and immediately, say 2 weeks ago, it dropped. It's going to hit all of these stocks and you're going to bounce out. So the reflective micro crashes are amplified even more, especially when you're attracting new people. And this is the problem with flow, is that if they happen to get a quick return in, they're going to be very excited. If they get a quick downturn, they're going to run fast. And, my job, I see as revealing marketing and storytelling and narrative and, how this is all coming together regarding critical metals and Andrew Forrest, is that we need to look at the reality of this and what is true and what's behind the headlines. And also, to some extent, as much of a roller coaster ride as it is, ignore that flow. You have to know it's there. You have to understand it and know that it's going to happen. But you have to stay vigilant and disciplined, and you have to have a plan. I mean, that was our market mindset, is you have to know, what is my plan? Because if the stock drops and there's no news, why is it dropping? Well, it could be just flow. It could be a short seller. Now, of course, people go to immediately, oh, it's inside trading. It could be this, it could be that. Maybe. But we see sell-offs in good assay results as well. What we want to do is focus on people having a blueprint already for them. We have a drill sheet now. Boom. There's a score on it. They put out a news release. We get to see Has it shifted the score? Has it changed the thesis? Has it disproven it? Is there questions I need to follow up and call the company and ask about? This is what's so great about, I mean, I'm tooting my own horn a bit here, but this is also what's great about large language models. I can throw in a whole bunch of textbooks, get it to synthesize data on a 3D model that some other company has given me, and it will give me a score. So it's very interesting to see how you can put all this together into one cohesive project that we've built, and to provide that emotionless framework in order to not get caught up in the flows. And believe me, it's not going to stop. I mean, I think it's fair to say, regardless of whatever political spectrum you're on, there's going to be an emotional roller coaster here in Canada and in the US. It's all throughout Europe, believe me, as well. There's lots of hot topics. So I don't think anyone would, say that that's not true. And that's going to be reflected in the market. On top of the entire narrative of the truth is, you need a ton of energy. You need a ton of metal. You need absolute astonishing numbers of it in order to meet the demand of AI alone. I'm not even talking about any transition now. Like, even if you don't like the green transition or clean energy, anything like that, all right, fine, let's not talk about it. Just the demands of AI is enormous. That's a ton of metal. Oh, it's multiples of tons of metal. Bad euphemism. But you get my drift. That's a true story. The critical metals is true. And this is going to lead into why it's interesting when you have someone like Andrew Forrest, who's the founder of Fortescue, kind of poke a jab at someone like Trump about critical metals not being of importance. And yeah, that's going to grab headlines for a lot of reasons. I mean, he's a very interesting character. Billionaires get to say whatever they like. But I put that into the realm of Elon Musk talk. He has, Fortescue has Wailu. It's a critical metal play. Like, they're in that space. So it's funny that that private arm keeps a stake in nickel and battery projects, but his rhetoric says ignore metals while he's quietly accumulating them. This is classic arbitrage, narrative or narrative arbitrage, play that you're seeing right now. So when a figure like that shrugs off the idea of critical minerals, immediately that drew my attention because I thought he says some crazy stuff sometimes, which is fun and interesting. But guess what? That keeps Fortescue right in the news. It keeps that flow because it's getting headlines. And whether it's for good or bad, he knows these algos are picking up on that. I have to remain vigilant. I need to remain out there talking about things. Otherwise, my story just falls. It just goes quiet. So we thank him for that. But with that wisdom, I guess you'd say, of manipulating the market by pretending that critical metals aren't important while still having Wailu, disingenuous. I know that they're a big fan of hydrogen. I think hydrogen is very interesting. It's very early. I think that there's a lot of work to be done, but I think it's fascinating. They're really into hydrogen, but they still have all the critical metals as well that they explore with the batteries and the nickel projects. So when I see that, it causes some interest. And I like to kind of point out a couple, kind of stories out there as well, or companies. And once again, I'm not picking on them. It's just that they kind of reiterate flow as well. So if you look at the metals company, that thing, holy smokes. Early this year, this is the deep sea mining story. Critical minerals, it's the independent critical minerals, we can provide the West. It can be done. They've done engineering. The narrative from a SPAC to this grew from $1 to $11 peak. That's quite a run. They're right now, I think it's at 6 right now. I'll have to check, but it's dropped significantly. So what's changed? Nothing. There's no geology has changed. There hasn't been engineering rebuttals, or there hasn't been any engineering feats of, hey, we've solved this problem. There's nothing. What happened was there was some announcements by Trump that he's basically supportive of this idea. Boom, stock goes through the roof. So you can see flow. The drill sheet would tell you right out, no, there's no news that should move this stock. It doesn't mean it's not going to, but you have to be aware of that. And that's why it's so important to, when you see something and you're new and you see a stock moving, sometimes it's moving for all the wrong reasons. And it could be moving either direction for all the wrong reasons. So our policy chatter, is to evaluate with that understanding of that's how algos work. Another one that's a bit more mining specific as well, and certainly has a lot more history, is if you looked at Northern Dynasty or you looked at Seabridge. Both of those are optionalities on the price of gold. Arguably, I don't think I'm being too dramatic by saying probably unlikely either one of those are ever going to become a mine. Should they? Arguably, you could say yes. They are fantastic geology, fantastic deposits. They score exceptionally high on drill sheets, but I mean, they have, especially Seabridge, has risen dramatically. It's pulled back again here, just simply as a proxy to gold. And once again, one would, and once again, I'm not picking on Seabridge because it isn't good. It has good geology. It's great. It's just the size and scale. They would have to attract huge income of money and investment into Northern, British Columbia here. That's the KSM project. Into British Columbia, 2, Canada. You can't, there's no money coming to Canada right now. And with this budget, there's no incentive to come to Canada, to invest into Canada. So it's very challenging to think that you're going to get billions flowing in to build a mine in BC, in Canada, under the current permitting, government, you name it, especially for gold. So it's an optionality monster. And if you look at the same with Northern Dynasty, that has legitimate environmental issues that people could certainly defend, even if you believe it would be a fantastic mine, which it would be. It would be very economic. It would be very sound. It could add a huge stockpile of copper for the U.S. I mean, it would be a fantastic deposit. But it is a pinpoint for a lot of people. They're not going to back down. They're going to take it. They would take it to Supreme Court. They would fight. So once again, I'm not saying anything about the project as being bad or the management or anything else. It's just they have significant issues that seem very, very challenging anytime soon. But that's not the narrative, and that's not the flow of money. And once again, that's important to know. That barometer of sentiment, rather than development of project, is important to know. And the charts mirror that fund flow, as I mentioned. These aren't feasibility stories or environmental studies come back or anything of that. It's the market's obsessed with ESG, speed, and liquidity, and the unminable becomes the most tradable, which is sort of ironic. In any event, let's just jump back to what makes Andrew Force's comments so revealing. So he downplayed critical metals to pivot attention towards hydrogen, but the market behaves the way he does, is chasing narrative over necessity. And I see that as being a very big problem, because for us, we want to reveal truth. That's important to me as an investor. I don't trade. I'm not interested in trading. I'm an investor. I like to find companies that have a shot at being vertically integrated or becoming mines. Now, some will say, Andrew, that's crazy because finding mines is very, very, very challenging. Yes, it is. There's lots of ways to make money in this space without finding a mine. But under the backdrop of none of these great things that we want, whether it's AI, whether it's robotics, or whether you don't want them, is energy. And that's going to come from metal, and it's going to come from extraction. It's going to come from mining. That's just a fact. That story will not change. Short of some sort of aliens coming down and giving us some sort of energy source, or these mythical stories of the government working on free energy forever, it's not going to happen. And AI is not solving it either. So we have energy needs that are true, and whatever form that you wish to look at that, and what other lens you would choose to look at that, and staying firm to that, not just as a true foundation, as a fundamental, that's not a narrative. And so it's a little disappointing when you see someone try to play the narrative game. I think in part because he wants to take a shot at Trump, but also because you stay relevant and you stay with the algos. They'll keep trading you. They'll look for you. You'll create liquidity in your stock, which people like to see. And that's an unfortunate way that the markets work. I mean, they are markets. And people have to adapt to the fact that 80% of it is sitting in an ETF. So challenging times. My sole reason for creating this was to try to get back to the people that there's a chance for you to be part of something bigger, to invest in projects, to spend money on R&D that would be supporting the R&D of infrastructure, building roads, building power plants, building AI and robotics, to look down that supply chain instead of saying, oh, I know a lot about engineering and robotics, I'll invest in XYZ company, or just blindly saying, I'll just throw it at Google. Is that you look back and go, well, what makes all of these things? Like, do we have the materials? And no, we don't. For all these grand claims and future things of setting up, what was my favorite one? An AI data center that'll be covered in solar panels in orbit. Like, no, like the amount of solar panels you're going to need for that is huge. And that's a lot of silver. So how many silver mines are coming on this year? I'll let you put it in the comment section if you know how many silver mines. Now, there's some expanding, yes. But the reality is there has to be an influx, massive influx of cash into the mining space. And guess what? We've seen a little bit of it. And this isn't just narrative. The US government coming into an antimony project, coming into rare earth projects. Is it, far off to think that they might come into copper projects? No, they're coming into copper projects. How about phosphate? Or how about potash, other critical metals? How about helium? Yeah, I think it's all possible. And do you have the right administration? Once again, whether you like it or not, will this administration actually take action and blueprints of a plan and move quickly? Yes. They're not going to go do a study for 7 years, spend $1 billion on it, and then the taxpayers go, wait, where'd all that money go? Well, I don't know, but we did a whole bunch of studies. And guess what? I'm getting reelected. Let's do some more studies. This is actual capitalism and open markets at work, where you encourage the markets to go and incentivize people, go do the work, not sit around and talk about it or create more studies. Is no, get that material so that we can make those things. And that's the real do attitude that we need to have here again. And regardless of messaging, or if you like this person or not like this person, we must have that in, I call it the West, because they're doing it in the East. They are building things, and they're doing it environmentally sound. They're doing it to regulation. They're just not arguing and playing politics because they don't have to. They're communist. So that's an advantage when you don't have people that have choices and say in things. So to think that they're not is a mistake, and that we should be moving at lightning speed as well in order to supply all of the materials. Because yes, will AI be able to change the world? I think it has a very good shot. Is it tomorrow? No, but in 3-4 years, yeah, at the pace they're going, it's already solving lots of problems. It will create other ones. Believe me, we all know that. But we need to win that race. I mean, that's hands down. And people ask sometimes, why do I talk about all these bigger topics? Because they're all interconnected. If you don't know the flow of the money and the fact that most people aren't buying stock as much as I want them to, as much as my mission is to try to encourage people to make some money, rather than spend $400 a share in Tesla, you could get a 20 cents or 30 cent company that has a high score. It isn't just a wing and a prayer, and has near-term catalysts that you could participate in. You don't need tons of money. And nowadays, I mean, opening a trading account, I mean, it's dead simple. It's not me telling you to buy a stock or not buy a stock, but people should be interested in how their countries are being run. And the best way is by doing it with your money. And I don't mean by handing over taxes. Handing over taxes means you believe someone else can do better than you into researching and investing, or where money should go. And I think it's a lot more interesting. It incites a lot more curiosity. It's certainly young people. If they feel like I have a say, and I have a say by my wallet of putting money into something that I believe in, for me, it's driving home that narrative that mining is the answer. So at the Market Mindset, what we do is we cut through all that noise, because the market no longer has a mind. But luckily, We still do. Algorithms don't have minds. They're not creative. They don't think. They just look at a plan, they apply that plan, it's a tool, and they spit out an answer. So today, I like to look at it as being that insight is alpha. That's the true alpha. So stay curious, stay contrarian, and stay intelligent. We'll see you again next week, everyone. All the best. Most investors lose money in junior mining stocks, not because the sector is broken, but because they don't know how to decode them. Headlines, hype, a few flashy drill holes suck people in, and 80% of those companies will never make it. I'm Andrew O'Donnell, founder of The Market Mindset. And after years in finance and watching billions flow in and out of this sector, I built the drill sheet. 10 factors, 10 minutes, one score that filters out all the noise and shows you which stories deserve your money. First, rocks matter. Without continuity, without scale, without real 3D models, you've got nothing. The drill sheet asks, is this deposit a system or is it just a one-hit wonder? Without that foundation, the stock dies. Second, bet on people, not just rocks. Has management raised money before? Have they built a mine? Have they sold a project? The drill sheet scores the team the same way Wall Street scores CEOs, by track record, not by promises. Third, catalysts move stocks, not just rocks. Geology is the foundation, but stocks reprice on events investors can trade. Drill results that prove scale, JV deals, financing, resource updates. Without catalysts on the horizon, even great geology won't move the share price. The drill sheet maps those catalysts on a timeline, so you know if you're looking at the next re-rate or just watching cash burn. Fourth, know your multiples. If you're paying $100 million market cap for a story your peers are paying $20 million for, you're the bag holder. The drill sheet benchmarks juniors against peers to know if you're buying leverage or paying for hype. Now, let me be clear. The drill sheet is not a magic number. It's not a crystal ball. It won't predict the future or tell you when to buy or when to sell. What it does is far more practical. It filters out 80% of those juniors that are just noise, and it shines a spotlight on the small minority with legitimate prospects. It's the fastest way to reveal true potential and to know the right questions to ask next. That's why we tie it to CEO interviews. We've done hundreds of CEO interviews. The score points that spotlight, and the interviews let us drill deeper. This is book 1 of the Drill Sheet series, Unlocking Junior Mining Opportunities. 10 factors, 10 minutes, one score that filters noise and shows you the minority of juniors with a real shot. Here's how to try it. Download book 1 free right now. Every Friday, we go live with subscribers and we break down the 2 companies that we scored that week. If you subscribe now for just $9, we'll run a drill sheet on your pick, the company you want to see. Send us the ticker and you'll see the framework at work. Stop guessing. Start investing like the pros. Download Unlocking Junior Mining Opportunities today and join us on Friday.